New legislation has been proposed to eliminate federal taxes on Social Security. Minnesota Representative Angie Craig introduced the You Earned It, You Keep It Act, and the goal is to eliminate federal taxes on Social Security retirees nationwide. She called the double tax unjust, and that would put more money back into retirees' bank accounts. First, let's understand some important dates regarding Social Security. President Franklin Roosevelt signed Social Security Act on August 14, 1935. Then, with the stress of Social Security becoming insolvent, changes had to be made. Under legislation enacted in 1983, the Social Security Trust Funds received income based on federal income taxation of benefits. The funds received taxes on up to 50% of the benefit from a single taxpayer with incomes over $25,000 and from taxpayers filing jointly with incomes over $32,000. Then, 10 years later, legislation enacted in 1993 extended taxation of benefits. The legislation increased the limitations on amounts of benefits subject to taxation from 50% all the way to 85% for single taxpayers with income over $34,000 and for taxpayers filing jointly with incomes over $44,000. In Craig's bill, Social Security would be paid for basically placing more tax on those with higher income. Now, I'm keeping this as simple as possible and will keep you in the know as more information becomes available. Currently, Social Security is paid via FICA tax. You pay 6.2% out of your paycheck and your employer pays 6.2%. In 2024, the Social Security wage base limit rises to $168,600. You won't have to pay Social Security payroll tax on the amount that exceeds that limit. However, the new bill would be paid for by taxing individuals with higher income, specifically those making over $250,000 a few years down the road. Another interesting fact is that Stephen Goss, the chief actuary for the Social Security Administration, said that the provisions of the You Earned It, You Keep It Act would actually extend the ability of the program for an additional 20 years. So the depletion of the trust fund would be moved from gone in 2034 all the way out to 2054. Remember, this is not law yet, and to be honest, I'm going to be a little surprised if it passes. It could be amended or flat out squashed. In the meantime, there's no reason to wait. Check out my video titled Avoid Taxes on Social Security Benefits. It's linked up right here, where we talk about options that you can implement right now to help reduce and even eliminate the taxation on your Social Security. Over half of those receiving Social Security benefits are currently being taxed, and a majority of them are being taxed what I call unnecessarily, meaning that they could implement some financial planning or tax planning to prevent this from happening. Nobody wants to pay more in taxes than they have to, and certainly not on their Social Security in retirement. I'll keep you in the know as more information comes to light, but in the meantime, if this was helpful, please like and subscribe, and remember to always consult a licensed professional who understands your specific goals and dreams.